Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button, subscribe if you haven't. Let's get those algorithms going. And I'm going to do a video today, just updating. Today was a very good day for gold. Went up a little. Silver wasn't up that much, but it's in a bull market. And the funny thing is, I was looking at the economic data today. S&P Global Manufacturing is 51.9. ISM Manufacturing, which is in 50.3, both expansions. But the data was mixed because the construction spending, which was supposed to be 7% increase, that was a 3% decrease. And so this data is actually mixed. On the surface, it looked good, but the leading indicator of this, construction spending, which would, that was negative. So you can see the little leading indicators of the economy were not that good. And one of the things that, one of my friends, Rahul, he's AIH Sports and AIH Finance, brought me up to something, the near-term forward spread. Difference between the forward rate on the 3-month Treasury bill and the yield 6 quarters in the future, and the yield on the 3-month Treasury bill. And that has become negative. And generally, every time it's negative, if you look going back, the mid-70s, that was inflation / stagflation, bad recession. Then the 1980, around 1980, of course, that was a 2-year severe recession. And then in 2000, that was the popping of the tech bubble. 2007, it went negative again. 2019 to 2020, it went negative again. And this time, it is really, really negative. It hasn't been this negative since 1980. So something is brewing if you look at this near-term forward spread. And one of the other things in a gold bull market is we haven't really seen many of the juniors get a bid. But this one company I was looking at, Angus Gold, I own it for all the over-the-counter market. It's not investment advice. I'm not even endorsing it. I'm just holding it for now because I think it will get bought out. I'm actually down on it, but it's a great property, great. I think it'll do well. Today it has a 26%, ticker ANGVF. Went up 26%. This is just one day. And that is a sign that a bull market's coming. Because if you look at most of the rises, I'm just going to go look at Anglo Eagle Mines in the last month. Let me get the 1 month. That has gone up from 51 to 61. But meanwhile, a lot of these juniors have not really risen like the seniors. And generally the seniors rise first. And another one, I'm just going to do triple flag. That's gone up from 1310 to 1474. Royalty and streaming sector has gone up. Franco-Nevada from 105 to 115. That's gone up. New Gold. Most of these I've talked about. I own all these. New Gold, if you look at that 1 month, gone from 138 to 170. But the really small junior one, they have not been rising like these ones. And the fact that they're starting to catch a bid today on some of them show that we're early in this bull market. So I think it'll last about a year and a half. I think there'll be another crash coming, as I said. And if you look at the near-term forward spread, something's in the brewers. And I think that's why the Fed's cutting rates. They're looking at that, they see it. And that's all I have for today. So anyway, if you like this video, hit that like button, subscribe if you want, and I'll see you next video.